The morning began like any other in the global financial centers, with traders sipping coffee, checking their emails, and scrolling through the familiar tickers on their screens. Yet by 9 a.m., something extraordinary happened. It started as a subtle flicker, a sudden spike on a few scattered monitors showing the Iraqi dinar. Traders barely noticed at first, attributing it to a glitch, until the numbers continued to climb at an unprecedented pace. Within seconds, the flicker became a blaze of bright green, the kind that only comes when a market is moving in a way that defies expectation. Phones began vibrating furiously on desks as traders received alerts from their Forex apps, alarms that were rarely triggered for this currency. The atmosphere in the trading floors shifted instantly, conversations stopped mid-sentence, and all eyes turned toward the glowing monitors. A trader in London muttered, almost to himself, "It's actually happening," and the words spread like wildfire. Screens in New York, Frankfurt, Tokyo, and Dubai all reflected the same reality. The Iraqi dinar was surging. Analysts who had spent months predicting small, incremental changes were now forced to scramble to explain the magnitude of this movement. Their calm, professional demeanor cracked as they frantically typed updates, checked multiple sources, and called colleagues to verify the numbers. No one had seen this coming, and yet here it was, undeniable and spectacular. Investors at home were equally stunned. Ordinary people who had been quietly holding onto small amounts of dinar for years suddenly found themselves staring at screens that displayed numbers they hadn't imagined possible. Hearts raced, palms grew sweaty, and the room seemed to vibrate with anticipation. Social media erupted with screenshots of the surging currency, each post more dramatic than the last. Within minutes, hashtags like #DinarExplosion and #ForexAlert were trending worldwide. Online forums overflowed with speculation, some rational, some absurd, but all united by the same emotion, awe. In the heart of New York's financial district, a mid-sized Forex brokerage erupted into controlled chaos. Phones rang incessantly, clients demanding updates on their positions. Traders shouted across the floor, trying to relay information faster than the market itself could move. Every click of a mouse felt like a heartbeat, every keystroke a potential fortune. Analysts scanned news feeds, hoping to find an explanation. A new policy from the Central Bank of Iraq, whispers of IMF involvement, rumors of government negotiations, but nothing concrete emerged. Immediately, the market itself seemed to have decided to act first, leaving the world to catch up. Across the ocean, in Dubai, a young trader had been quietly monitoring the dinar for months. He had spent countless nights studying charts, analyzing global financial indicators, and debating with peers about the potential for a sudden revaluation. Today, he felt a mix of disbelief and elation as his carefully calculated predictions were being validated in real time. Every trade he executed seemed like a calculated step in a complex chess game with the entire world. Calls with clients, normally polite and measured, now carried the excitement of someone witnessing history in the making. His team, usually composed and routine-driven, now moved like a hive, coordinating rapidly, making split-second decisions that could result in massive gains or catastrophic losses. Meanwhile, in quiet suburban homes, the scene was dramatically different yet equally intense. Families huddled around laptops, tablets, and phones, eyes wide in anticipation. People who had barely understood Forex trading a month ago now found themselves checking charts, refreshing exchange rate updates, and joining live-stream discussions with thousands of others. Some were long-term investors who had placed small bets on the dinar years ago, while others were newcomers drawn by viral posts and sensational headlines. The air was thick with tension and excitement, a shared feeling that something unprecedented was unfolding before their eyes. By mid-morning, the story had reached news outlets. Financial reporters scrambled to provide live coverage, explaining the surge in terms they could understand, but often struggling to convey the sheer magnitude. Analysts appeared on television screens, talking heads discussing potential catalysts and outcomes. The coverage was a mix of fact, speculation, and outright wonder. "We are witnessing a historic moment in currency trading," one anchor said, barely able to hide his own amazement. The Iraqi dinar is not just moving, it's igniting global markets. Tweets from reporters, traders, and amateur investors flooded the internet, each one amplifying the sense of urgency and possibility. Back on the trading floors, the spike caused a chain reaction. Some traders hesitated, unsure if the surge was sustainable, while others jumped in, seizing the opportunity. Every buy and sell action sent ripples through the market. Large institutional investors entered cautiously, wary of volatility, but motivated by the potential for monumental gains. Smaller investors reacted instinctively, often making impulsive trades driven by excitement rather than strategy. The result was a perfect storm of activity, prices swinging, screens flashing, and the energy palpable. The market itself felt alive, a living entity reacting to collective human emotion and the sudden surge in value. Even the skeptics were forced to take notice. Those who had dismissed the possibility of a sudden dinar spike were now frantically analyzing their positions, calculating potential gains or losses, and questioning why they hadn't acted sooner. Financial advisors were inundated with calls from clients demanding explanations and guidance. Social media debates intensified, with heated discussions about whether this was the beginning of a long-term trend or merely a short-term anomaly. Every platform seemed alive with speculation, screenshots, and predictions, each one adding fuel to the global frenzy. As the hours passed, the intensity did not diminish. Instead, it evolved. Early disbelief transformed into cautious optimism, then into outright excitement. Investors, traders, and observers realized that this was not a minor blip. It was a turning point. The Iraqi dinar had captured global attention in a way that no one had anticipated. Phone calls, notifications, and online messages created a constant hum of activity, connecting individuals from all corners of the world through a shared experience. Ordinary people and professional traders alike felt part of something historic, witnessing an unprecedented surge that could change lives in an instant. By late morning, it became clear that this moment would be remembered. The markets had responded with intensity, social media had amplified the event, and global audiences were glued to their screens. The Iraqi dinar, once a quiet, often overlooked currency, had claimed the spotlight, forcing the world to pay attention. For those watching, the feeling was electrifying, a combination of awe, excitement, and the undeniable sense that they were witnessing history in real time. And as the screens continued to flash, traders, investors, and curious onlookers alike knew that this was just the beginning of a story that would ripple across the globe. By midday, the frenzy surrounding the Iraqi dinar had reached a level that no one had anticipated. The initial shock of the morning surge had evolved into a complex, almost electric atmosphere of speculation, strategy, and sheer adrenaline. On trading floors across the globe, the energy was palpable. In London, traders shouted into phones while simultaneously scanning multiple screens, each filled with charts, numbers, and flashing tickers. The sheer speed at which the dinar was moving left even the most seasoned professionals scrambling. Analysts who had spent years studying market behavior now found themselves at a loss as the currency's spike defied all conventional models. News outlets ran live updates every few minutes, their reporters struggling to keep pace with the market's volatility. In New York, anchors interrupted regular programming to provide minute-by-minute coverage, their tone a mix of astonishment and urgency. "We are witnessing a historic moment in Forex trading," one anchor exclaimed, while analysts on screen tried to interpret the catalysts behind the sudden surge. Rumors swirled about possible IMF announcements, secret government deals, and economic reforms in Iraq, but no definitive information had surfaced. The mystery only added fuel to the fire, and every unverified tip sparked waves of buying and selling. Investors at home were glued to their devices. Social media platforms exploded with screenshots showing the dinar's meteoric rise. Online forums, once quiet and specialized, were now overflowing with new users asking questions, sharing tips, and posting their astonishment. Longtime investors discussed strategy in hushed tones on private threads, while newcomers celebrated what they believed were instant fortunes. YouTube live streams dedicated to Forex updates drew thousands of viewers, many commenting in real time, sharing screenshots and speculating on the next move. Ordinary people who had never traded currency before were suddenly immersed in market charts, trends, and predictions. It felt as if the entire world was watching a single, coordinated event unfold. In Dubai, a young trader named Omar could hardly contain his excitement. Months of preparation, countless late nights studying exchange rates, geopolitical developments, and financial indicators had led to this precise moment. He had placed small but calculated bets on the dinar, knowing that a sudden surge, while improbable, could be transformative. As he watched the numbers climb, he felt a mix of exhilaration and tension. His team moved like a well-oiled machine, coordinating trades, analyzing real-time data, and ensuring they could act faster than the shifting market. Every second counted, and every misstep could result in either immense gain or catastrophic loss. Across Asia, traders in Hong Kong, Singapore, and Tokyo were experiencing the same rush. Currency desks were filled with a flurry of activity, with phones ringing non-stop and emails stacking up in inboxes. Many brokers were forced to pause to double, check the legitimacy of the surge, ensuring that it wasn't a technical glitch or a rogue algorithm manipulating the numbers. Once confirmed, the floodgates opened, and every major financial institution began recalculating their positions. Orders were executed with lightning speed, and the global ripple effect of the dinar's surge became undeniable. Meanwhile, amateur investors were riding the wave with equal intensity. Individuals who had dabbled in Forex casually, or even those who had been entirely new to investing, suddenly found themselves checking charts every few seconds. Notifications from trading apps came in rapid succession, each alert representing a moment of potential profit or loss. Excitement and fear collided, creating a whirlwind of emotions. Social media amplified this effect. Hashtags like #DinarSurge and #ForexExplosion trended worldwide, with thousands of posts, shares, and comments appearing every minute. The dinar had become the center of a global conversation, transcending the usual boundaries of financial news. In London, a veteran trader named Margaret observed the chaos with a mixture of awe and anxiety. She had been through countless market shifts, some dramatic, others minor, but nothing had prepared her for the speed and intensity of this dinar surge. Her team worked in tandem, buying and selling at precise moments, attempting to balance risk with reward. Even as her portfolio grew in real time, she knew that the market's volatility could reverse in an instant. Every trade carried weight, every decision mattered. The adrenaline coursing through the trading floor was nearly tangible, creating an environment where split-second choices could define fortunes. Analysts began dissecting every possible factor behind the movement. Some suggested political maneuvering, citing rumors of upcoming reforms and investment incentives in Iraq. Others pointed to whispers of IMF involvement, suggesting that unseen economic forces had aligned to trigger this historic spike. While none of these explanations could be confirmed, the speculation itself added momentum. Investors reacted not only to the numbers but also to the perceived potential behind them, creating a feedback loop that intensified trading activity. Every prediction, even if unverified, had the power to sway markets for a brief moment. As the afternoon progressed, volatility became the defining characteristic of the day. Prices moved erratically, sometimes climbing by several points in minutes, only to dip slightly before surging again. Traders had to be both fast and strategic, carefully timing their decisions to maximize profit while minimizing exposure. Those who hesitated risked missing out, while those who acted impulsively risked overextending themselves. The global market had become a high-stakes arena, and every participant felt the weight of both opportunity and danger. Online, communities were equally charged. Forums dedicated to Forex, cryptocurrency, and alternative investments were flooded with posts from people sharing screenshots of their positions, celebrating gains, or lamenting near misses. Advice was exchanged rapidly, often conflicting, yet everyone shared a sense of participation in an unprecedented event. Even social media influencers, who typically focused on lifestyle or entertainment content, joined in, broadcasting live reactions and interviews with traders. The dinar had transformed from an obscure currency to a global phenomenon in mere hours. Amid the chaos, some investors reflected on the broader significance of what was happening. The surge wasn't just a numerical anomaly. It symbolized a moment where geopolitical developments, economic speculation, and human behavior converged. It was a reminder that markets were living entities, responsive not only to tangible factors like policy and trade, but also to sentiment, psychology, and collective anticipation. People from different continents, backgrounds, and experiences were now linked by a single event, united by the sudden surge of a currency that had long existed on the periphery of global attention. By late afternoon, the pace began to stabilize slightly, though the excitement remained. The initial panic of the surge had been replaced by careful strategy, with traders adjusting positions and assessing risk. Analysts continued to debate the causes, while ordinary investors celebrated small wins and planned next moves. Despite the calmer tone, the truth remained undeniable. The Iraqi dinar had captured the world's attention in a way that few could have imagined. It had transformed ordinary individuals into active participants in global finance and reminded seasoned professionals that the market could still surprise, even in an era dominated by algorithms and prediction models. Even as the sun began to set over major financial capitals, the story of the dinar's mid-day surge continued to unfold. Social media feeds, financial news broadcasts, and online trading communities remained active, with every update sparking discussion and analysis. The initial shock had evolved into a sustained fascination, a recognition that history was being written in real time. Investors, analysts, and casual observers alike understood that today was a turning point, a day when global Forex screens had been set ablaze by a currency that few had ever paid much attention to. And yet, everyone knew that this was far from over. The midday frenzy had set the stage for the next phase, one in which decisions, timing, and strategy would define outcomes in ways no one could fully predict. The Iraqi dinar had become a symbol of possibility, volatility, and opportunity, and as the world watched, it was clear that this was just the beginning of a story that would continue to shape markets and captivate attention in the days, weeks, and months to come. As evening settled across the globe, the energy surrounding the Iraqi dinar's unprecedented surge refused to fade. While trading floors gradually emptied, the impact of the day's events continued to reverberate through digital channels, news networks, and social media platforms. The initial rush of adrenaline had given way to a tense, electrifying awareness that the dinar had not only captured attention, it had become a symbol of possibility, volatility, and global intrigue. Analysts cautioned against complacency, emphasizing that the market could swing just as dramatically as it had risen. But for ordinary investors, the excitement was hard to temper. Across New York and London, late-night trading teams remained on high alert. Every minor fluctuation on their screens was scrutinized, every notification a potential fortune or risk. Traders worked in coordinated bursts, sharing data, calling clients, and executing orders with precision. Phones rang constantly as investors sought guidance, clarity, or simply reassurance. In homes across the world, families still sat in front of laptops, some cheering silently as numbers climbed, others holding their breath as their portfolios teetered between gain and potential loss. For many, this day was no longer just about currency. It had become a collective experience, a global moment of suspense and excitement. Financial news outlets dedicated entire segments to analyzing the implications of the dinar's surge. Experts debated live, breaking down possible causes with meticulous care while occasionally acknowledging the unpredictability of the market. Speculation about political developments in Iraq, IMF interventions, and potential international agreements ran rampant. Analysts urged caution, warning that volatility could spike at any moment, yet viewers seemed transfixed. Online polls and comments flooded the feeds, reflecting both hope and fear. Every prediction, every analysis became part of a larger conversation, connecting traders, investors, and casual observers across continents in a shared narrative. In Dubai, Omar and his team had transitioned from reactive trading to strategic planning. Months of preparation had trained them to anticipate volatility, but nothing could have fully prepared them for the scale and speed of the day's events. They reviewed charts, analyzed trends, and recalculated risk exposure in real time, adjusting positions to safeguard gains and optimize potential profits. Every decision was deliberate yet urgent, every action a delicate balance between strategy and instinct. Even as exhaustion threatened to settle in, the team remained sharp, fully aware that one misstep could erase hours of progress, or one brilliant move could amplify their success exponentially. Meanwhile, social media continued to amplify the story. Influencers, investors, and casual viewers alike shared screenshots, reaction videos, and live commentary. Hashtags like #Dinar skyrocket, #Forex history, and #currency explosion trended worldwide. The live streams, some hosted by professional analysts and others by passionate amateurs, drew tens of thousands of viewers, all participating in real-time discussions, predictions, and debates. The dinar had transcended its identity as merely a currency. It had become a global event, an intersection of finance, speculation, and human curiosity. Even those who had never considered investing were glued to their screens, watching history unfold. In homes across the United States, a retired teacher named Lisa leaned forward, eyes fixed on her tablet. She had purchased a modest amount of dinar years ago, treating it as a speculative side investment rather than a serious asset. Today, that modest amount had multiplied in value, and while she did not fully understand the technicalities of Forex trading, she could grasp the significance of the numbers before her. Her excitement was tempered by caution, but she found herself swept up in the broader wave of enthusiasm, sharing updates with friends and family and joining online discussions to better understand what was happening. The psychological impact of the surge was evident everywhere. In offices, homes, and public spaces, conversations revolved around the dinar. People speculated about potential profits, discussed strategies, and debated what might come next. Even casual observers who had no investment experience were drawn into the narrative, sharing articles, screenshots, and commentary with their social networks. The surge had transformed the currency into a topic of global fascination, bridging divides between professional investors and everyday individuals. Analysts began examining historical patterns to contextualize the dinar's movements. They compared it with previous Forex anomalies, studied geopolitical factors, and projected potential outcomes. Despite their expertise, many admitted that today's events defied conventional logic. The speed, magnitude, and coordination of the surge were unlike anything in recent memory. For some, this was an exciting reminder that markets were dynamic and unpredictable. For others, it was a cautionary tale about the risks of rapid, speculative movement. Regardless, the world was watching, and the narrative continued to evolve by the second. As night fell in Europe and the Americas, the global community remained engaged. Traders in Asia adjusted to their morning, picking up where their colleagues had left off. Market analytics continued to flood social media, blending professional insight with public reaction. Online forums remained vibrant, a mix of experienced investors, newcomers, and curious observers, each contributing to the collective understanding of the day's unprecedented events. Memes, screenshots, and speculative posts circulated widely, reflecting both excitement and uncertainty. The dinar had become more than just a currency. It was now a cultural phenomenon, a shared story that connected people across the globe in real time. In the quieter moments, some investors paused to reflect on the broader implications. The dinar's surge was more than a momentary spike. It represented the convergence of geopolitical developments, financial strategy, and human emotion. It reminded traders that markets were living entities, influenced not only by policy and economics, but also by perception, anticipation, and collective action. Every trade, comment, and reaction became part of a larger, unfolding story, one that would be studied and remembered for years to come. By late evening, the initial chaos had evolved into a more measured, strategic approach. Investors and traders analyzed the day's events, calculated potential next steps, and discussed scenarios for the coming hours and days. While uncertainty remained, the experience of witnessing the dinar's surge had left an indelible mark. The currency, once overlooked by many, had captured the attention of a global audience, turning ordinary people into active participants in a historic financial moment. The excitement of the day was tempered by strategy, reflection, and anticipation, but it remained undeniable. The world had witnessed something extraordinary. Even as screens dimmed and trading slowed for the night, the story of the dinar's surge continued to resonate. Financial news outlets summarized the events, analysts debated outcomes, and social media remained active with commentary, reactions, and speculation. People shared stories of their own experiences, successes, near misses, and lessons learned. The surge had transformed the ordinary into the extraordinary, and for many, it was a once-in-a-lifetime event. By the end of the day, it was clear that the Iraqi dinar had achieved something remarkable. It had not only surged in value but had also captured the world's imagination, connecting investors, analysts, and everyday people in a shared narrative of excitement, strategy, and anticipation. As night fully settled, the screens might have dimmed, but the impact of the day's events remained vivid, leaving an indelible impression on global markets and individual lives alike. The world had witnessed a historic moment, and the story of the Iraqi dinar's dramatic rise would continue to unfold, echoing through forums, news outlets, and conversations for days, weeks, and even months to come.